Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap for July 23rd through the 27th. This week's main focus was basically the US and European trade deals as well as quarter two earnings. Some of those big names this week reported earnings such as Google, Amazon, and Facebook. Facebook, of course, taking that dive. So this week we're going to quickly glance here last week's changes. Basically everything moved up besides the NASDAQ having fallen negative 0.07. Everything else, last week's winner was the Russell 2000, which this week, it's flip-flop. Russell's the loser, but we're going to be discussing that. So we're going to go over the four main indexes, take a look at my portfolio change for the week as far as percentage-wise in comparison to the indexes, go over stock futures. Right now looking a little bit negative going into Monday, not anything bad. It can always change. And take a look at some stocks that here moved in the after hours, some financials. Take a look at the big names, Google, Facebook, Amazon. I know another one out there is everyone's favorite, or a couple people's favorites, is AMD. That one did really great this week, having moved up 16%. And then financials are helping out again with the S&P 500. I think we're going to start to see moving into some all-time highs in the S&P 500. Once those financials get kicking into gear, we're only slightly off those all-time highs. So I think we're going to start to hit there within a month or two. So let's go ahead and get started. S&P 500 moving up 0.61%. Year to date up 5.43%. Not quite the winner this week. The Dow Jones is the winner. So here, Monday did slightly come down by 0.06, but lots of companies here, consumer companies, mainly Coca-Cola released, not mainly. Coca-Cola, Pepsi releasing earnings this week, did really well, really helping out the Dow Jones, especially here on going into Tuesday and or Monday after hours, really helping out the market. And then here Wednesday after hours on close, another huge jump up 1.57%. Year to date up 2.96%. Financials helping them out, Coca-Cola, Pepsi, and a few other names. NASDAQ, not quite the loser, although it did sell off, 1.06%. That's a pretty big change, but again, still up year to date. The winner right now up at 12.08%. Now the loser this week, whereas it was the winner last week, is now the loser this week. So down, the Russell 2000 down 1.97%. This could be, kind of a sign as far as the state of the nation, but who knows? Russell 2000 is basically a large, 2,000 stocks that all basically stay within the United States. They're all national traded companies. They're not international. They're not, some other company that's going to be external. They're all here within the U.S. So Russell 2000 having gone down nearly 2% in a week. Now, my portfolio last week, our portfolio had only changed up 0.15%. This week, we had a really nice change. The only thing that really held me back was Apple having moved down this week, and that hurt my IRA. So everything else moved up. My Roth IRA moved up slightly. Thrift savings plan, my wife's Roth IRA, and her individual account. So the difference here of 169 to 190 had a couple referrals this week. So I believe it was 3 referrals that really helped out that portfolio. That portfolio is growing with starting at $100, having some friends, some subscribers, viewers, you guys out there helping it out. Of course, you guys like M1 Finance. If you have any questions out there at all over the platform, let me know in the comment section below. I have no problem making a video specifically to target any of those questions. So after hours here, we had some movement. S&P 500 going down slightly, NASDAQ as well, nearly 2 points down, and the Dow Jones slightly. So going into Monday, don't be surprised if it's slightly down. Philip Morris, I'm going to be making a video out on Sunday talking about my wife's Roth IRA. If there's any stocks in there I would sell or never touch, that would be, well, we'll talk about it then. But after hour movement, we had some after hours. As far as financials, we had a couple tech in there. I can see names here. General Electric kind of coming down off. PayPal, Coca-Cola moving up again, still moving up. We had Chesapeake Energy Corp, some Cisco in there moving up slightly. Morgan Stanley, Wells Fargo moving down. So interesting mix. AMD coming down slightly at negative 0.79. That is completely fine. If you know how much they've ran up this week, we'll talk about that here in just a second. Google released earnings Monday after close, did very nice. They're basically, analysts had came in expecting $9.59. They actually beat expectations by almost $2. They reported $11.75. That was the only number I had actually watched. Google was one of those ones. One of the viewers out there asked, what my opinion was of Google, and Google is such a giant. With YouTube, they're getting into self-driving cars and AI and all sorts of other stuff. Very interesting company. I don't see it kind of going anywhere. It's very passive and big. So, 5-day change up 4.52%. Year to date up 18.36%. Very nice there. Facebook did do the face dive this week after earnings. They beat earnings, missed revenue. They said that their daily active users had dropped. Their capital expenditures were more than expected. They took on more debt. They're bringing in more security to try and combat those fake profiles, combat hackers, bringing in new employees. That just dropped them down. So they were down 20% on the day due to the news, but looks like they may have only dropped 19% here, 0.79% there. It all adds up. So they were down over 20% at a point when I had looked at them. So very interesting there. Amazon, not sure if they had beat earnings or not, but it does look like they may have sold off here on Thursday after the close on Wednesday. It looks like they did sell off nearly 3%. Not 100% sure. I wasn't. Let's see here. Amazon delivers strong earnings growth, sending shares higher. So maybe what happened was on Thursday they had investors had sold off at their highs, trying to collect some of their money, taking profit. Then they came out, released earnings, and that's what shot it up very nicely, but didn't quite keep it, came down off those highs. Still doesn't matter. Still up 5-day change, 0.2%. Year to date up 55.39%. That is an amazing, amazing gain there year to date. Now another one here I had watched. I know Ale over at Ale's World. I believe he's an investor of AMD. AMD here. Your 5-day change at 14.79%. Year to date, this one beats out Amazon slightly here, almost double at 84.24%. Now I guess they released some earnings, did really well. Expectations are that they're going to be growing very nicely, kind of going forward as well. So talking about financials now, JP Morgan doing up huge. Now we need financials and technology to move these markets higher. Financials have not been helping out the market, but as we talked about just a few weeks ago, I believe we're going to see a change in direction as far as financials go, and we're going to start to see all-time highs again coming very soon within the next 1 to 3 months here with the S&P 500. JP Morgan moving up 5-day change 4.27%. Year to date, this one was in the negative just a few months ago. We did a video talking about 16 stocks that were in the red in the Dow Jones. JP Morgan was one of them. Citibank also moving up 3.57, still in the negative year to date, but could definitely go positive. Goldman Sachs 5-day change 2.57%. Very nice change all across the board. Imagine if you've bought any of these stocks on their lowest lows. Year to date still down 6.72, and of course Wells Fargo here 5-day change 3.94%. Year to date still down 3.36%. You want exposure to all of these stocks here without buying anyone specifically? Check out ticker symbol XLF. This is the financial sector ETF. This one 5-day change up 2.07%, and it has Berkshire Hathaway. That's basically Warren Buffett's baby right there, followed up behind by JP Morgan, Bank of America, Wells Fargo, Citigroup, and US Bancorp, and a few others here, Goldman Sachs, and so on. So very strong ETF. If you're trying to buy and hold financials in your portfolio, I would recommend checking that one out. Now, as far as the economy goes, there was an article posted this week. Trump administration announces a $12 billion bailout for farmers hit by tariffs. So farmers have been hit really hard by tariffs. I'll put this article in the description below because you guys can check it out. I think it's worth to read. Also, some of, soybeans, steel, aluminum, what else? Solar panels, but solar is not so big. If you're any sort of company that has to deal with aluminum, steel, you're going to get hammered. Automotives, if you're Coca-Cola, if you're a distributor, they have cans that's all made out of aluminum. Kind of going forward, I believe Coca-Cola or Pepsi, one of the two, had mentioned that the price of it is actually hurting them. They're going to have to start raising the price on those consumers. So interesting here to just see a bailout already happen early on here. Now, home builders down 4.46%. I don't know if you guys follow Meet Kevin. He's a real estate investor over in Cali. He came out with a video talking about slowdown in California. He has seen this for the past 2 or 3 months. Decline in approval of loans, decline in just overall housing sales, more days on the market. So we're going to see how this goes. I kind of talked to my realtors here locally, and they've noticed a slowdown as well, but I believe this is all mainly due to raising rates. People aren't able to afford what they could a year ago. Rates were very low. I talked about this with another investor here. I bought my house in 2013. I got a 3.7% interest rate. I pay roughly, $850 for my mortgage. This same house that I bought in 2013, that mortgage would now be roughly $400 or $500 more per month. That would be, $1,200 to $1,400 instead of my $800 mortgage, where rates are now 5%. So huge difference in what you're able to get approved for with those rising rates. And also, just everything is so expensive right now. Houses in the market, 3-bedroom, 2 baths used to be around $175,000 here, very new. Now these same homes, $256,000 to $275,000. So huge change there in equity, and it's kind of pricing a lot of people out from being able to buy these affordable homes. So sales are down, more days on the market, and there was a number coming out that they had said they were expecting a decline of roughly 2.8%, but new home sales have actually fallen to 5.3%, which is the lowest it has been in the past 8 months. So very interesting numbers there. That's the Home Builders ETF. USO oil moving up this week. I believe this is due to President Trump talking with the European about having them import more oil, more soybeans, more natural gas from the U.S., and also trying to help, bring easier access for medical devices to the United States. So that was a big talk right there with President Trump and the European as far as discussions and tariffs and such go. They did shelf automotive talks, so steel and aluminum. So Ford, General Motors, they came out with their numbers going forward. They expect their revenue to decline just due to the costs associated with those prices. So similar to Pepsi, Coca-Cola, any stock that is affected in orders and has their products in steel or aluminum, they're going to be affected by that. But that's oil. Dollar moved up this week slightly here. Let's go 5-day change. They started off the week here at 94.37, and then moved up to 94.68. So nice little movement for the dollar. Didn't quite. Let's see here. Silver and gold. I know there's another member out there, subscriber, that had mentioned that he believed gold and silver were kind of hitting those lows now. So here we have silver, 5-day change, down 0.14%. There was a bit of a bounce here on Tuesday and Wednesday, but they did fall again Thursday, losing all of their earnings there for the week and ending there in the negative. Same with the gold. Gold had a nice little bounce there on Tuesday, Wednesday, lost it all on Thursday, and ended in the negative here at 0.63%. Bonds moving down as well, 0.19%. Yield going up slightly there for bonds. So that is all this week. Kind of going in, looking forward, I would recommend you guys go check out the talks between President Trump and the European Commission. President Jean Claude, I believe is his name. So they're talking about a whole bunch of secure trade commissions and the whole talks of what's going to get affected and what's not going to get affected. I think that's a big thing to kind of watch out for because it could affect your stocks that you're invested in. So looking forward, next Wednesday, the Federal Reserve should be coming out and letting us know whether we should expect another rate hike or not. In 2018, we have 5 more months left. We're hitting August. That's 4 more complete months. We were expecting to have 2 additional hikes, but I don't believe we're going to have one. We may end up having one more, but President Trump is highly against it, trying to really push down that dollar right now, not wanting the rate hikes to take place. They want that easy money out there right now for these financial, or for these companies, because it makes it really easy to get debt, keep the rates low, because once you start raising those rates, debt gets really expensive, and right now we're in a propped up market. We may see it implode on us here kind of going forward as we hit those highs. We may see repercussions from it. So that is it for this week. If you guys did enjoy the video, remember to like, comment, and subscribe for future financial videos. If you do like it, I already said that, hit thumbs up. Kind of going forward again, I do believe I'm going to be changing it up slightly, not talking about as many stocks, mainly just going over the indexes, my portfolio change for the week, and maybe some news here and there. But I would like to keep these videos down to about a 5 to 10 minute instead of these 15 to 25 minute videos. So let me know what you think in the comment section below. Thank you guys, of course, for tuning in and watching. As a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.